Bank of Japan raises interest rates. What it means for the global economy. Welcome back to the Daily Buzz. Today we're diving into a major financial development that's making waves across global markets. The Bank of Japan has announced a rare move, raising interest rates for the first time in years. What does this mean for Japan's economy, the global financial system, and your wallet? Stick with us as we unpack the details. Before we get started, don't forget to hit that subscribe button and turn on notifications so you never miss an update on critical financial news. And if you find this video insightful, give it a thumbs up and share your thoughts in the comments below. Let's get into it. The Bank of Japan, or BOJ, announced today that it's raising its key interest rate from negative territory to a modest positive level. This marks a significant shift in policy, as the BOJ has maintained ultra-low interest rates for decades in an effort to combat deflation and stimulate growth. This marks a significant shift in policy, as the BOJ has maintained ultra-low interest rates for decades in an effort to combat deflation and stimulate growth. This move follows mounting pressure from rising inflation, which has reached levels not seen in years. Japan's core inflation rate has been hovering around 3.5%, well above the central bank's 2% target. By raising interest rates, the BOJ aims to curb inflation while balancing economic growth. So why is this move by the Bank of Japan such a big deal? First, Japan's economy is the third largest in the world, and changes in its monetary policy have ripple effects globally. For years, Japan's low interest rate environment has fueled investments, both domestically and internationally. A rate hike could lead to shifts in capital flows and currency valuations. Second, the move aligns Japan with other major central banks, like the Federal Reserve and the European Central Bank, which have also raised rates to combat inflation. This signals a global tightening of monetary policy, which could affect international borrowing costs and global trade. For the average Japanese citizen, higher interest rates could mean higher costs for mortgages and loans, but it could also result in better returns on savings accounts. For businesses, borrowing costs are likely to rise, which may impact investments and expansion plans. Internationally, the yen is expected to strengthen against other currencies, making Japanese exports more expensive but imports cheaper. Travelers heading to Japan may find their money doesn't go as far, but Japanese consumers might enjoy lower prices on imported goods. Looking ahead, economists are debating whether this rate hike marks the start of a longer-term policy shift or a one-off adjustment. The BOJ has indicated that future decisions will depend on inflation trends and economic performance. Expert predictions and scenarios for BOJ's next steps. As for global markets, analysts are closely watching how this move impacts trade dynamics, investment flows, and currency markets. One thing's for sure: this decision adds another layer of complexity to an already uncertain global economic landscape. That wraps up today's update on the Bank of Japan's interest rate hike. What are your thoughts on this bold move? Let us know in the comments. Don't forget to like this video and subscribe to the Daily Buzz for more in-depth coverage of global financial news. Thanks for watching, and we'll see you next time.